Is now starting. All attendees are in listen-only mode.
Good afternoon, or good morning, or good evening, depending on what time zone you are. And welcome to CW's webinar highlighting the main findings of one of our most recent report released in May this year. And this is the World Cement, Clinker and Slag Sea-Based Trade Report. We are happy to present the second edition of this report. This is the result of closely tracking the trade market for cementitious materials, both in terms of volume, pricing, routes, future volumes, and of course changes in the future of the current status quo that we're seeing today. The report also provides an exhaustive look into trade infrastructure. I'm speaking here about terminals, plants, grinding stations, both for clinker and for slag, as well as cement carriers and their usual routes. My name is Raluca Turcel, and today I'll be joined by my colleague Tea Vukicevic, the lead analyst for this report, who will walk you into the most important findings of the study once I finish with some introductions. That being said, I will start with a brief intro to CW Group and to the World Cement, Clinker and Slag Sea-Based Trade Report. We at CW are, as many of you know, dedicated to providing to our clients the calibrated market intelligence that best fits their needs, and often the needs they don't know they even have. We provide the tools that help such professionals grow their business and stay one step ahead of the competition. Of course, an important aspect for everybody involved in any type of business. Knowledge, we believe, is a very important tool, and we provide it through, let's say, three different levels of detailing. And now you can see here on the page, we provide it through media, platforms, research projects, and advisory projects. And if you look at it at the spectrum from top to bottom, through our advisory branch, we max out in terms of customization and bespokeness. Just to go quickly through our capabilities here, through our advisory capabilities and consulting ones, our aim is to help clients solve problems. And this can be of different natures. We're speaking about M&A advisory, due diligence projects, even technical or commercial, internal analysis for legal purposes, or strategy formulations, be it that we're speaking about operations or improving the P&L. We work with companies around the world, and not only companies from the cement world, but to a lot of other industries that you can see here on the previous page. We work with clients from all over the world, and this is something that is very important to us as it helps us expand both our reach of market understanding and help us create very valuable connections that are instrumental in helping us bring the most accurate data to our clients. And that leads me to the, let's say, medium spectrum of our capabilities and looking at the research function. Our goal here is to, let's say, create market intelligence tools that are usable by a wider range of clients. So basically, it's a one project fits many type of endeavor. We'll be looking today into the most important findings of a project that's part of our research branch. Now, how do we go around this field? We have some standalone reports that invariably we release, be it 4 times a year or 2 times a year or monthly, depending on the scope. And then we have some one-off reports that we create when several clients requested. And to give some examples of that, we're looking at our lime studies, our oil well cement studies, white cement studies, and of course this one today. Now we apply, nevertheless, an incredibly rigorous analysis to this work, even though it's not advisory work. And through the years, I can attest that our research findings have come to be more and more reliant on primary research. That happened, of course, because our, let's see, Rolodex of global network contacts and friends has been expanding more and more. And the last one here, to move to the media branch, let's say the most accessible to the largest range of customers. And we basically have subscriber-based news platforms that cover all of the sectors that you saw previously on the first page. The beauty of these platforms is that, and what we think sets them apart, is that we, the analysts, myself included, are responsible for the editorial side of these platforms. We decide what is newsworthy and what is not, and we do so by keeping in mind that one news that may not be of any interest for an investment banker in New York could be very interesting to cement plant operator in Nepal. So we really do try to cater for a wide as possible range of clients. Now, to move on to the report we are presenting today, the Cement and Clinker and Slag Sea-Based Trade Report. This is something that we first released in 2016, and it happened mostly because our clients from the cement manufacturing world had a vested interest in better understanding how the current and future global supply chain balance is impacting the volumes traded on key cement trading routes. And as Sarah will show you in the coming pages, our report is filled to the brink with maps showing routes, showing terminals, waterside plants and grinding stations, as well as cement carriers. Now in these maps, we have drawn the complicated trade routes we are seeing in the world today, as well as how we think they will evolve in the 5 years, looking at importer, exporter, and volume. As probably most of you joining this webinar today know, trade of cementitious materials happens in an overwhelmingly majority by sea. Can happen in bulk, big bags, or jumbo bags, or small bags. It can happen in containers, general bulkers, or specialized carriers. Now we look at all of these different splits in our analysis and much more. So it's a very it's an exhaustive type of analysis, just because there's so many variables to think about when looking at the trade of cementitious materials in the world. Now, how did we do this? And that takes us to our methodology, and I hope you can see these arrows all right. Now, as many of you know, we are quite a presence in the cement analysis world. This is what enables us to have our own very comprehensive and weekly updated data on everything related to cementitious materials. I'm speaking here about demand, production, utilizations, capacities, and so on and so forth. What we do is that twice a year we actually forecast for more than 60 markets. It's of course the main market, the future supply-demand balance. Of course, we forecast a lot of more elements, as you can see here, but the supply-demand balance is at the end of the day what impacts trade. And let's say these are the elements that put the setting stone or the foundation stone for the methodology of the report we're looking at today. Now, other research, of course, has to happen, and you can see here at the bottom, at the top in light blue, the sources from which we draw information. Now, we work down from this element and we combine it with our own assumptions and coefficients informed by primary research to reach our final analysis, which is an integrated analysis of sea-based cementitious trade. And that being said, I will like to introduce you to Thea, who will move on with the actual meat of this presentation. Thank you all so much for your attention.
Hello everyone, my name is Thea Vukic and I'm Associate Analyst with CW Group. Today I will walk you through some of the highlights of our report, Raw Cement and Clinker Sea-Based Trade. First, I would like to start with seaborne trade, with its trade movements, main routes, as Rauk already mentioned, about waterside facilities and carriers that move the volumes, and of course, volumes that are traded by sea and shares and percentages of each of the products. So first, let's start with an overview of consumption of cementitious products. In 2017, the total cementitious consumption reached about 8.5 billion tons. This number includes, of course, gray cement, white cement, gray and white clinker, slag, and fly ash. These are all the commodities we are looking at in this report. Out of this total consumption volume of 8.5 billions, only 1.6% is traded by sea. Of course, the driver of total consumption growth is gray cement, and that is the most sea-traded cementitious material in the past 5 years, from 2012 to 2017. And of the total consumption of gray cement, only 1.5% is actually traded by sea as well. When it comes to gray cement, as we already mentioned before, supply-demand balance is very important factor in the whole trade, and switching up the status between undersupplied and oversupplied markets can really change some routes, can change the course of the trading. For example, in undersupplied markets, which actually include developing countries, setting up new capacity could be a very high investment risk. But then again, in developed ones, which we always give an example, US, very strict environmental regulations, they lead to the closing of capacities, or they make opening new plants very costly for the country. So those situations can, of course, change the whole trading situation as well. But there are some markets that actually emerged from suffering from cement shortage to being oversupplied. For example, Vietnam, Indonesia, and Thailand. Now, the total traded volumes by sea of all the cementitious products was about 140 million tons in 2017. The fall of China's gray cement exports and slower demand in some importing markets, and also self-sufficiency in other markets have actually impacted volumes in 2017 as we compare it to 2016. That said, the total number, it decreased by 6% year on year from 16 to 17, mainly because of gray cement and gray clinkers trading. And now let's take a look to this slide where we can see which commodity is the most traded one, and also where we can see the comparison between consumption of each product and its trade by sea as well. So at the global level, gray cement continues to be the most traded cementitious commodity, making for about 44% of total trade in 2017, or let's say about 60 million tons for the year. Clinker, which includes both white and gray clinker, accounted for about 35% of total trade, which would be around 48 million tons. And the clinker is followed by slag that holds 18% share of the trade, or around 25 million tons. Far less traded commodities are white cement and fly ash, which made for 3%, white cement made for 3% share, and fly ash made it for 1% of total trade. Now to go back to cement and clinker, I just would like to mention again that those products together are accounted for 86% of total cementitious consumption. And then looking at the sea-based trade of those commodities, we can see, of course, that that's the case. Also, they are accounting for the largest shares there as well. Let's see main trade routes and where these volumes actually go. This map shows you the main trading routes and volumes traded as of 2017, last year. The largest volumes of cementitious materials are, of course, traded in Asia Pacific. The Asia Pacific markets, they trade region to region, but most volumes are traded interregionally as well. Out of the whole volume that the region traded, we can say that 40% was gray cement and around 39% was gray and white clinker. So they hold almost the same share of the trade. Then Asia is followed by West and Central Africa, and Western Europe and Baltics water-based trade in terms of size of the cargoes. All these materials are usually shipped in bulk, big bags or bags. We notice that shipping in bulk continues to make the largest share of water-based trade, despite the increased preferences for big bags. However, big bag shipments are more likely to increase because of easiness of loading and unloading. Bag cement, for example, continues to make for a significant share as well, around 24%, but much less than it was recorded in 2010. In 2010, bagged cementitious shipments were making for almost 30% of total trade, and this is decreasing. This share is decreasing, mostly because of the evolution of developing markets in terms of unloading equipment. And here we can actually see who controls the movements of all these large volumes. This map shows the total trade facilities by importing regions, and those facilities are very strategically located. If you can obviously see that Asia, Far East Asia, excluding China, has the largest amount of those facilities, and that is the region that where most of the volume is traded. In our report, we took into account waterside plants, import terminals, and grinding facilities, which are located close to the waterside, and they are provided with import-export facility as well. The top 5 internal cement trading companies are responsible for around 40% of the total international trade in 2017. Those companies are LafargeHolcim, HC Trading, Taiheo Cement, Cemex, and the remaining volumes were traded by other smaller cement companies like Buz Unicem, Cementos Argos, Algo Cement, and etc. And as well by independent cement traders that are not associated with the companies. All these companies and traders, they have plants strategically located to export cement, and they usually have the trading arm that enables a global trading network of cementitious materials. That said, I would just like to briefly mention that at the global level, there are about almost 800 cement terminals. There are over 130 waterside grinding plants and almost 150 waterside cement plants. Most of cement terminals in the world are located Far East Asia, and specifically in Japan. Now one more map. Here you can see cement carriers that are currently trading cement. Apart from over, let's say, 360 cement carriers that are used for seaborne distribution, there are more than 200 that are under the 1,000 range for lake and river transportation. Most of which are concentrated in Great Lakes area, and as you can see here, we didn't include them. We are including just those that are on the map. What is important to say here is most of them are concentrated in Asia. The reason for that is, of course, the size of the cement trade, of the volumes traded inside the region and from region to region, but also some environmental regulations in Japan and Korea that are related to cement spillage, and some unfavorable cement, unfavorable weather conditions that make difficult for unloading and loading cement from bulkers, and that is the case actually in India. Average utilization rate of these carriers is almost at 100%, and there is always a demand for those carriers. But nevertheless, this year, new capacity can be expected to emerge in the cement seaborne trading market, and which includes the conversion of bulk carriers as well. Especially because of solid demand in Asia that contributes to turnaround in the market. Investors are interested in new vessels and conversions, and so far, the majority of the new vessels were delivered to Japan, Indonesia, South Korea, India, Vietnam, and Philippines. So again, Asian markets. Let's take a look now how the future trade is going to look like, and how the future routes might look like. So here, I would like to talk about how will the trade look like in the next 5 years, and what are the actually drivers that will be pushing up the trade. There are several drivers that we believe it will impact the sea-based trade in future. One important driver is the environmental regulation, which is preventing domestic producers to produce at full capacity and preventing them from adding new capacity. As I already mentioned, US is the best example of such markets. Another important driver of sea-based trade are production shortages and supply chain optimization and limestone shortages. So, apart from traditional markets already known that have limestone shortage, such as Ivory Coast, Ghana, Bangladesh, shortage of good quality limestone also leads to clinker imports in some big markets, for example in India. But between 2018 and 2023, we believe the total volume of sea-based trade of all the cementitious materials will reach almost 151 million tons. It is an increasing trend, which represents an annual growth rate of over 1%, and it is likely to be driven in particular by growing demand for clinker in limestone scarce markets that will announce that they will increase grinding capacity, and also they will be driven. The growth of the trade will be driven by supply chain optimization efforts. What is more important here to mention is that we believe that clinker will replace grey cement as the most traded commodity by 2023. Stricter environmental approach to limestone burning in developed economies, also the scarcity of the same raw material. It represents actually an opportunity for clinker to grow its market share here. That is why the trend for future plant expansion is likely also to be more material translated into grinding units rather than integrated plants, since also cement manufacturers can benefit from that. On the short term, they can reduce their investment costs. Now I would like to show you our last slide. Possible trading routes in 2023. So in 2023, we expect the cementitious trade to intensify on trade routes to Americas, in particular to the United States and to west and east coast of Africa. So compared to 2017, we expect volumes reaching US to increase by 21%. The figure, of course, includes trade coming towards East Coast, West Coast, and also through Great Lakes from Canada. Also, harsher environmental regulations that prevent capacity expansions in developed markets, such as Western Europe, Australia, New Zealand, they are expected to be the driver for growing imports there of materials in 2023. But on the other hand, we expect volumes coming from China to fall significantly because of strict cement rationalizations that have been going on in the country for the past 2 years. So that said, I would like to conclude our webinar today with some closing remarks. Our report is available for purchase on our website. If you order it, you will get it in an electronic format. You can contact me, Raluca, or our sales team. Also, if you have any questions, you can feel free to contact us regarding the report, regarding the webinar, regarding anything you need. And I hope you enjoyed today, and thank you for joining us, and have a nice day.